today is the ALTS Forum. So, sort of preparing this conference, I was questioning myself, why do we actually use that word, ALTS or alternative, to describe those asset classes? So I made some quick research, went to the dictionary to understand the origin and the exact meaning of that word, alternative. So that word has been actually introduced in the English language in the 16th century, and it is coming from Latin originally. And when coming to the description of that word, I found really two core ideas. The first one is when somebody is going to an alternative, it means that there is fundamentally a choice to be made between two things, option A and option B. So the concept of alternative is creating a concept of choice which are mutually exclusive. So I found that interesting. The second point is usually the alternative choice is a secondary choice, so not the most popular or not the most obvious. So actually I find today that that word is probably not the right one to describe what we call alternatives asset classes. And as we are today in Abu Dhabi, is a capital of capital, where there is so much energy, creativity, and where the future of financial markets is being shaped, I would challenge the room maybe to come in the next 20 minutes with a new word to describe that word alternative. Because when we are talking about those asset classes and talking to CIOs, it's not about choosing traditional asset class or alternative, it is and. And when we are looking about asset under management, traditional asset classes are probably much larger than alternative, but when we are looking at revenues made by asset managers, those two asset classes are very much comparable. So I would say the word alternative is not really appropriate anymore. But just to, before jumping into the fascinating discussion we have, I would like to hand over to you to quickly introduce yourself. So Cher and Lucy, we are lucky today to have phenomenal panelists, but I will hand over to you both to introduce yourself.
Thank you, Luke. So Cher Mali, I am the Group CFO for Phoenix. We are a publicly listed Abu Dhabi-grown Bitcoin miner.
Hi everybody, Lucy Gazmararian here. I'm the founder and managing partner of a crypto VC fund based here in ADGM, regulated by the FSRA. We invest in definitely the cutting edge of assets, and that includes tokens. And I would say that the defining feature of Token Bay Capital is that we have a license to operate as a venture fund manager, and we can now invest in token investments, and that's new under the framework here. So really hand in hand with how forward-thinking the UAE is with these new types of assets. So happy to talk about that later, and very happy to be based here in ADGM.
So maybe, so obviously alternative asset classes is a very wide topic. Right. Giving our two panelists today, we are going to deep dive into one area of this, maybe starting with a question to you, Chair. So how is digital infrastructure and tokenization in general, how is it like sort of influencing what I would call traditional alternative investment?
Yeah, I think it's important to understand. I think tokenization is often seen as this some sort of a vague mechanism or a concept which is purely just linked to crypto. Really what it is fractional ownership. If it's just making accessibility and settlement and auditability of those assets a lot more efficient and available on a blockchain for the public to see. So it really isn't about steering away from one asset class. It's essentially facilitating your alternate investments in a shape where you can actually create ownership and put them on a forum where it's easily tradable for investors, and making it more democratic of sorts.
Right. Maybe Lucy, you can elaborate on this, because in VCs, I mean, a few years ago, it was about investing equity in even like a blockchain type of startup. So what about having another type of instrument, maybe, and token, maybe, to invest into those startups?
Yeah, so actually thinking about it, you can sort of come at token investments 3 ways today, actually. So you can go via the sort of native token route and invest in token projects. You can now have an asset that's either a fund or real estate that's then tokenized. And you can actually access tokens on national stock exchanges now, because increasingly publicly listed companies are holding crypto. So tokens are becoming more and more accessible through different investment vehicles. And I think the broad direction of travel is that essentially we're moving to complete tokenization of absolutely everything. But today we're seeing the interesting landscape of certain parts that are tokenized and certain parts not. So from my perspective as a VC, I'm very interested in the token projects and investing in protocols that I can access value of that protocol by investing in the token. And that's obviously distinct from an equity investment and a traditional subscription agreement or SAFE. And that's where we're moving into sort of decentralized economies and this idea of investing or participating in a network. And actually, it's expanding what the role of a VC is, because you can hold the token, you can buy the token, but you can also start working and contributing within that network as well. You can stake your tokens and enhance the security of the network. You can have voting rights attached. So increasingly, the role of a VC when you invest via a token is actually far more multifaceted, I would say, than just as an equity investor. It actually makes you more of an active investor when it's via a token.
Yeah, and the US legislation is changing relatively fast on those topics, but I mean, many of those concepts and the framework has been created here in Abu Dhabi. So what can you say about that, like, global trend in that space?
I think it's been, we've seen a complete about turn from the US. And I think markets, investors, pretty much the whole landscape is underestimating how important the fact that US is now defining itself as a crypto country with crypto capital markets and using blockchain for not just for financial markets, but actually for aggregating data, for tracking everything. And Trump is very serious when he says this is the infrastructure of a new internet. And that's where we are today. And now that the US is no longer making crypto effectively illegal, which is what they did up until this point, so crypto's history is about 17 years, now we're seeing the ripple effects in other jurisdictions that are saying the US has now legitimized tokens, token investments, network economies, and what is our policy? How are we going to approach this new vehicle? And that's what's interesting. Now I would say that crypto is a top-down issue. It's no longer bottom-up. It's actually the regulators, the governments, who are they going to issue licenses to? So actually, for the first time in crypto's history, it's being driven by authorities and regulators rather than from grassroots. Hopefully we'll find a nice combination and both will continue to flourish with the innovation. But I would say that's the broad changing landscape that we're seeing as a result of Trump coming into power.
So maybe back to you, Shermy. On one specific point, we have seen flows from VCs actually into crypto venture to sort of slow down a little bit. But on the flip side, we have also observed digital asset treasuries getting a lot of traction.
Yeah.
So what can you tell us more about that?
So I think,
ETs?
yeah, no, it's a fair question. Look, I don't think that the VCs are leaving crypto. It's just the capital is taking a different shape and form of how it's being invested, right? And I think it's back to the point Lucy's making. I think with a change in the US administration, with the new government, with a lot more clarity on digital assets and digital asset frameworks, what you see is a lot of institutional flows going into holding the actual asset, which is, for example, Bitcoin, right? What a lot of funds want to do is they want to take it essentially as an investment on their balance sheet and basically get the yields from it, right? So it isn't that the money is outside or it's flowing outside of the crypto space, it's just finding its way into a new structure. And I think ultimately it's going to, with a lot of traction on the digital asset treasuries, now that's also cooling down a little bit. What we're going to see is you will have, VC funding always comes back. It's back to which projects it's going to be, what kind of value, what kind of incremental value they bring to the shareholders or the investors. So you will see that money coming back into various different projects. But at the moment, this whole momentum into digital asset treasury is at the back of a lot more clear regulation coming out of the US.
Okay. Lucy, any reaction to this specifically?
Not specifically that, but I think it's interesting that you're a publicly listed, this idea of crypto companies now taking over national stock exchanges. Your company is one example, and I'm fascinated about the fact that you're listed in Abu Dhabi, and that's pretty landmark and forward-thinking as sort of, I would say, a
100%.
example company.
No, you're absolutely right, Lucy, and I think we're incredibly proud of the fact that we are an Abu Dhabi homegrown company. We're the only publicly listed Bitcoin miner. But to have that space and to be so proactive, the sort of support we've gotten from the Abu Dhabi Exchange and from Abu Dhabi Global Markets, to sort of, carve out that space for ourselves and offer an opportunity for investors to come in and be exposed to Bitcoin through an equity which essentially is funding raised to mine Bitcoins, right? So you're able to mine Bitcoin at a much cheaper price than you would be able to buy it from the market. So you're right. I mean, that's another way of a lot of investments flowing into the space.
Yeah. So on companies like Phoenix, how those companies are sort of managing regulatory and also sort of operational challenges in crypto mining and blockchain infrastructure to deliver really sustainable long-term value?
Look, I think we were very fortunate to be here in Abu Dhabi because I think, again, back to the point we were making earlier, the regulators were extremely supportive here. Unlike some of our peers in the US who've had to really struggle before the Trump administration to really establish their credibility, I think with us, the fortunate part was we chose Abu Dhabi as our home ground. And the regulators, ADGM, even ESCA, they were all willing to work with us and to understand how we're going to adopt regulation. Now, it meant a lot more disclosures as a public company. It meant a lot more governance. But we embrace it. We don't think regulation is anything that we have to oppose. We embrace it. We feel it brings a lot more transparency to what we do. And it adds to a lot of comfort for the investors to know what exactly is a company like Phoenix or any Bitcoin miner for that matter is doing.
What was the journey like to IPO? Was that straightforward or?
I think an IPO journey is always a pretty intense one. But again, I think with the right stakeholders, with the right partners, with the support from Abu Dhabi, we've been very, very fortunate. And we wouldn't have chosen a different location. If we were to do it all over again, we'd probably do it here without, any second thoughts.
Maybe a more generic question. To advise this room navigating between more, I would say, traditional investment into the alternative space and more, creative investment. What would be your advice, Lucy, to navigate those two asset classes?
So my observation with this crypto cycle, with the last one, so I would categorize the last one as the euphoria phase was in 2021 when everything was sky high. And what really characterized the last cycle was people actually rolling their sleeves up and getting involved with hardware wallets, downloading wallets, trying to access yields in DeFi protocols, and really trying to understand the pretty gruesome world of crypto in terms of an operational journey that you have to go through to actually get exposure to some of these protocols and some of these yields and to actually make your money work harder for you. Nowadays, crypto is handed to us on the silver platter. You just sign on to your brokerage account, you can access ETFs, you can access Bitcoin miners, you can access, effectively crypto stocks on national stock exchanges. You've got the MicroStrategies, or the strategy, I should say. So you've got these digital asset companies that are increasingly bringing altcoins to mainstream investors, again, via a publicly listed equity on a stock market. And you've got index funds. So actually, you can be pretty lazy as a crypto investor now because your brokerage account is doing all the hard work for you and has expanded their product platform. But I do think that's a shame because the trade-off for the ease of accessibility is that people are not actually understanding how to interact directly with blockchains, directly with networks, to be a good citizen on a blockchain network, because it's really about taking an active role and contributing, self-custodying your tokens, having a vote on how a protocol works. And so I think that's a missing piece and why perhaps this cycle has really differed from last cycle in terms of the retail participation is not there. So while it's been made easy for us, I think the jury's out as to whether that's ultimately a good thing in the long term for the health of these chains.
Good.
I think I, of course, respect Lucy's view on this, and I think it's a very fair point. But I would also argue that the fact that you can actually access the crypto universe through all these other mediums, in fact, actually makes it more accessible. And I think it actually opens up avenues for better understanding of what crypto is, because otherwise it's been this really fearful journey for a lot of investors sitting on the sidelines looking at whether they should go in or not. Now, if you have, and Lucy and I, we were just discussing backstage, mining as a service literally on your phone, offered by one of the providers in Dubai. I mean, it just makes investors a lot more comfortable if they know that they have multiple avenues and accessibility to those investments. My dad, who's an avid investor, not that he's particularly keen on crypto, but is a lot more comfortable still using an app than operating a digital wallet. And so that is the case for a lot of traditional investors. And this is, by the way, one of the reasons why we've also seen a lot more momentum with digital asset treasuries, because for institutions to be able to use traditional methods to access crypto is a lot more comforting than be able to hold that asset and be the custodian for it themselves.
Yeah. Okay, so I'm being told that we are already lacking time, so I think we should give a close to this. Thank you very much to both of you, and I hope that we'll find a new word for these asset classes, which is not anymore like a secondary choice, but very much core and probably the main choice. Thank you very much.
Thank you, everyone.
Thank you.